Hey everyone, and welcome to the Ncast. I'm Guy Weissmantel, your host and Executive Vice President of Marketing here at Ncontracts. In this podcast, our subject matter experts from across the company will be talking with industry thought leaders about relevant topics and trends in compliance and risk management for financial institutions. You'll learn the latest tips and tools to manage risk in this ever-changing environment. Let's get started.
Hello, this is Michael Carpenter with Ncontracts, and I have the pleasure of speaking with Sylwia Czajkowska, the Associate Director of Operational Risk at RMA. How are you doing today, Sylwia?
Good, Michael. Thank you very much for the invitation and an opportunity to highlight the work of RMA members in the third-party space.
Oh, yes, it definitely is. The pleasure's all mine. I have some questions I put together, but I understand you've been at RMA for quite some time. How long have you been at RMA?
It's been a long journey. It's coming up on 20 years right now, so definitely interesting role. A lot of new risks since I started, but definitely a lot of fun.
Oh, congratulations on a great milestone. Definitely seen lots of changes in the risk landscape in your time. And look forward maybe to many more conversations. But today, we're going to be focusing on the survey that RMA put together. Very valuable information in the survey, and it really focused on vendor management and how COVID-19 impacted financial institutions' preparedness and their posture as it relates to vendor management. So we're going to go ahead and jump right into some questions. First question, Sylwia, what was the overall response to the biweekly calls and the survey from your members of RMA?
Oh, Michael, I have to say I'm really happy to announce that we constantly get a great engagement from RMA members when it comes to the third party and any projects associated with the third party risk management. The third party group has been formed since the release of the guidance from the Fed and the OCC. So it's getting up to 7 years right now. And I think seeing third party as one of the regulatory concerns helps keeping this group alive. I mean, if you track the OCC semi-annual report, third party seems to be embedded in the key concerns in last couple reports. And we can see that the reliance on third parties is increasing as banks are using third party relationships to manage new technologies and payment products in order to adapt the evolving landscape. So in the last year, we have focused on a third party from the perspective of COVID. And I believe with recent events, we may see the shift of covering the third party relationships through the lens of cyber risks. But the response from RMA members was tremendous. We held weekly calls with close to 100 people every single time, and we always run out of time. So definitely a group engaged with a great dialogue.
Oh, that's great to hear. So the survey, again, lots of great information in there. Definitely should be leveraged in as much as possible when thinking about even just a forecast of what you might do for your own vendor management program in a financial institution. But how would you say the third-party vendors did overall through your survey?
Since the RMA survey was conducted about 4 months when we were into the global pandemic, so it was around July of 2020, many institutions were still in a process on figuring out their approaches. And because of that, we can see a little bit of range of practices depending on the maturity level of the institution, their asset size, the budget in place, the full-time employees assigned to the role of a third party. And possibly as the institutions continue to adjust their practices to that new normal right now, we can expect that those practices will continue to evolve and grow. But moving from the short-term kind of event to this marathon length event may change banks' approach over time. We had asked members just to kind of get a feel where we are and how they felt about the events. So we have asked them which of the following pandemic-related problems affected their firm as a direct result of the third-party relationships. And I have to say, in majority cases, there seemed to be no impact on operations due to the pandemic, at least at the time that we conducted this survey. There were maybe a couple instances where institutions mentioned they have been affected and really noted 3 specific items that stand out in the section of that study. So one of them was not receiving or receiving a little bit delayed response in time to their pandemic planning. The other issue was anticipation of potential financial failure of many third parties requiring backup plan reviews. And the third one was increased outages of or periodic system unavailability issues. And the delay in responses were maybe not necessarily due to the issues with the vendors, but possibly due to the load of requests being received from financial institutions that really try to get a confirmation from their third parties that they will still operate in the pandemic environment. But in a summary, we were really pleased to see that 75% of respondents had not experienced issues, either with their critical third parties or even 4 parties, and they were able to deliver services as a normal, even amid the pandemic.
Yeah, it's interesting to hear that not the pandemic itself, but the request for information during a pandemic would cause a little bit of maybe slower than normal. Next question here. Did your survey respondents, maybe all of your survey respondents or a majority, activate their business continuity program? And if those that did, how did that go for them?
Well, I think in anticipation for potential issues with vendors' ability to perform and deliver satisfactory services, many have been seeking statements or sending additional questionnaires, confirming that the business will continue without any interruptions. And we really tried to ask our group insights on 2 things. One of them was COVID-specific statements and responses, and the other one was strictly focusing on the BCP plans. Really based on the responses, we have learned that institutions, when they reached out to vendors, about 71% of them received what they called acceptable COVID-19 responses from all of their critical parties. And I want to put an emphasis on the word "or." It wasn't just 1 or 2 selected critical. We really wanted to know if all of your critical vendors meet the requirements. So 71% said yes. And then out of those who indicated that they were not able to obtain such an information, which was close to 27%, they mentioned that less than 25% of all of their critical third parties did not respond and provide acceptable documentation. But then moving back specifically to your question about business continuity plans, more than 56% of participants were actually able to receive detailed BCP plans from their critical third parties. And out of those, 39% that had not received the plans said again that it's less than 25% of their critical parties. I think overall, more than half of the respondents were satisfied with the quality and level of detail that they received from the updated plans. And I think now that we are looking into that longer term event affecting many institutions who use the same vendors, banks are probably considering a little bit more follow-up questions beyond what they would normally request from the institutions. So we can draw the conclusions that many third parties were really not prepared for the pandemic. And as a result, more than 52% had not received the detailed pandemic plans within 45 days. So there was a little bit delay on the end of getting the information. But as we heard, that if institutions started seeking for those plans, once the pandemic started, they really were put on a list of institutions, and that kind of delayed the responses and receiving information.
Okay. Thank you for that response. You know, we're always talking about, and we as in our various roles of providing guidance or reminders to institutions about business continuity, and that your vendor's plan is your plan in a lot of ways. It'd be interesting to understand as we continue to maybe move out of this pandemic. I think we're trying to how different from a third party perspective do they see the results of their everyday management through the pandemic related to the results of their testing pre-pandemic, right? And so, and what those vendors will be doing to update their own business continuity information. So something to definitely look out for. Another question that I have here, what steps are the survey respondents doing as a result of how their business continuity and their vendors' business continuity plans perform, as I was just stating, but are they already changing and refining their approach, that risk-based approach?
Yeah, actually over 90% of institutions confirm that they use third-party business continuity plans and pandemic responses plans as their tool to mitigate their firm's risk of serious business disruptions or in support of its business resilience goals. We try to learn if firms are planning to make changes to methodologies on their inherent risk or residual risk, or maybe introduce some kind of interim risk rating process. And significant majority of respondents confirm that they are currently not making changes, or they're not even planning to make any changes to redefine their risk-based approach.
Great. I'm actually going to ask a question about fourth-party vendors. Before the pandemic, fourth-party management and that vendor management was really more of a hot button item. It was really picking up steam across the industry. And then now it's doesn't seem as important, probably rightfully so, play in the environment that you're dealt with. But as regards to fourth-party vendors, did the survey respondents find there were enough safeguards in place to monitor those fourth parties?
I have to say that the fourth party has been on our agenda for members ever since we started, and it seems to be a constant struggle for the institution. I think many feel very confident that if the fourth party is your third party vendor, then that institution would have a sufficient due diligence in place. But it is a struggle to know how granular the institution should go, knowing and understanding the fourth party, and maybe now even going to the fifth and so on. So at the time of the survey, 93% of them said that their critical third or fourth parties have not failed or closed down as a result of COVID-19. I think many institutions are tracking four parties in more depth right now, looking into perspective even on concentration risk from the activity level, from the geographical level. I wonder if the cyber focus will make institutions have better due diligence into fourth and fifth parties going forward, and maybe trying to get a better collaboration with the third party and the vendors on how much information they can provide to you about their vendors.
Yeah, that risk-based approach covers so much, but I guess it's a level set. It's those vendors that are really most critical, having the most impact to our organization. And then, like as you said, and a great point that we should focus on impact as it relates to like that, from a cyber perspective, definitely. And then say, well, is that fourth party, does it impact the cyber awareness, resilience, posture? And then we really could have a better understanding. Maybe we start there and focus. Again, there's no real guidance out there that says specifically we must do, and these are things that are required. But a lot more work in that regard. The next question, how have your members altered their use of service level objectives or agreements, SLOs, SLAs, in light of COVID disruptions? Have they even changed those?
Yeah, we hear the SLAs are really key items for many of the institutions. And when we looked at the overall response, we can know that close to 60% of those that participated are not really relaxing their contractual SLAs and are not forgiving earned penalties during the pandemic. Close to 30% are doing it selectively with approved exceptions that are put in a contract. But if we drill down a little bit into mid-tier institutions with the asset size between 20 and 60 billion, we've noticed that there is actually an even split between not relaxing SLAs and doing it with the exceptions. So definitely a little bit range of practice here based on the asset size. But overall, it was really comforting to see that all tiers of the vendors, so anybody from the level 1 to 4, they have not been experiencing serious SLA misses relating to COVID.
Well, that really is great to hear. In the beginning of COVID, thinking about, from a risk practitioner perspective, like what could go wrong. And of course, there's the provision in a contract that might include force majeure. And I thought, oh no, what is this going to look like, right? And are we going to start to see this wave where vendors would, really take advantage of force majeure, where they wouldn't need to meet any contractual obligations? I'm glad to hear and see that it did not happen. And knock on wood, if we continue to not have those things, and as to your point and your survey found, SLAs or service level objectives even, we could stay strong in those, and that really does show some good resiliency. From a financial standpoint, we collect information publicly to understand the strength, financial stability of of these third parties. But when we saw that third parties were receiving the PPP loans, which could be an indicator that those vendors that we previously thought were sound maybe weren't, and then that could put the financial institution at risk. Then they maybe wouldn't endure a prolonged economic downturn. Can you speak to that type of financial risk, and then what other types of data might you monitor in that regard?
So, Mike, I actually had a very similar thought as soon as the PPP came out on one of our calls. That was my first question to the group. Are you tracking it, and are you really concerned when you see your vendor pulling it? And I was surprised to see none of them were really concerned. They just said, at this point, we're not tracking it. It's not an indication for us that the vendor might have any financial troubles. And I don't know if that changes at this point. Maybe it would be interesting to focus on it in more details to see how it evolved since the time that we asked that questions. We see the institution have definitely increased tracking of the financial health and paying bigger attention to receiving alerts, providing financial health rating. Some of them increased frequency of their vendor assessments, due diligence. They're looking into more real-time information versus past data, which I would think taking the PPP would be more of a real-time, something is troubling. But generally, I see that vendors are trying to be more proactive to kind of detect the red flags and show how they own the relationship and are they aware of the potential risk, how they can mitigate them. So they started doing very regular communication with vendors. I don't know if you're getting more and more emails from your customers. At this point, everybody is tracking the websites, looking at the news alerts, and really keeping the internal scorecards with the relationship owners. Maybe having a little bit internal collaboration to have that holistic view if people have different views and information on the selective vendors.
Yeah, to add to that, it definitely seems like you said, very relevant and real-time red flag. And so coupled with the information about back to the SLOs and SLAs that maybe risk-based approach being applied, that if we're not having a problem right now with the products or services being delivered, then maybe that red flag, isn't as large or doesn't make as much noise. But of course, if we're just looking at service level agreements from a volume perspective, we may not see it, maybe quality. And then of course, maybe we would recommend to our vendor management practitioners that it's a longer game that needs to be considered, and that right away it may not, but I would hope they don't just let that sit on, let that go unnoticed, I should say. Another question here about international vendors. Did those pose an added threat during the pandemic?
I think it definitely creates some additional level of concern because you have to kind of know what measures, controls, and limitations are being put in a place besides and outside of your sandbox. So you have a completely new sandbox to play with. And if you recall at the beginning of the pandemic, India and Malaysia and I really hope it was Malaysia, and if not, apologies to Malaysia on my end, but they were the first countries that were really impacted. And what many of our banks learned, it was almost overnight. Institutions learned that, for example, postal and courier services were on lockdown in India. So when they tried to develop the hardware and send the monitors or network tokens to people that were working from home, they really were not able to deliver those. So no one was able to find any solution at this point for delivering that materials in the offshore locations. And also the other example was the travel ban. So when employees were prohibited from traveling to their workplace, and many institutions couldn't have staff in their offices, and they started thinking of the alternatives. So that's how it started, with drafting the letters through legal counsel to make sure that some of the third parties are marked as essential workers and be able to run with the business. But I would think it definitely poses additional challenges if you have international vendors, just the need of tracking the local restrictions, and then look into the BCP plans to ensure that you can mitigate the risk and run the business as usual.
Yeah, and it's just way past arm's reach, right? While the world definitely is smaller, and our ability to communicate and have information is very strong, it's still it does add a lot, right? And you definitely start to get into other impacting events or agencies, so it really is arm's length and then separation. But speaking about the travel ban, how about staff at the third party? So, the vendors had a lot of staff now working from home. Talking about cybersecurity or information security risk. Now we've got potentially vendors that have access to NPI or PII, GLBA sensitive data, and these staffers are now in their own homes. What about those staffers or staff at vendors working from home as it relates to GLBA? What did the survey show in that?
Well, I think that's really a podcast on its own. I mean, the working from home and the challenges it posed, it's a huge topic. RMA was really lucky enough to engage our members to create kind of lessons learned document. We figured as of December, we had a handful of good suggestions that can be employed by third-party SMEs to help them navigate the unsettled waters. And one thing that really came out was really talent. This is becoming a bigger issue for many institutions. We've noticed that some people are losing talent due to the personal issues and just need to accommodate employees' challenges. But there is a lot of people that are putting extra hours. So there is a possibility of leading to burnout and not paying full attention to the flags that you otherwise would be seeing with your vendors. So I think when it comes to vendors, institutions really have to look at their resilience strategies, ways to harmonize their practices globally, know their contingency plans and exit plans, and look at the concentration risk from a standpoint of activities as well as geography. We have asked in the survey if institutions have questioned any of their third parties about the impact of their firms as a result of transitioning from employees work from home. And seems that there was applicable to most of the critical parties on the level 1 and 2, so very critical ones, and also for the third parties with the access to NPPI. That wasn't as much relevant when it came to the less critical vendors in a tier 3 and 4. But I think we have to all keep in mind that every firm in every sector operates within a complex extended enterprise with extensive reliance on third parties and relationship. And COVID-19 is a really sharp reminder of the importance of proactive third-party management, which is necessary for treatment, risk insights, and risk governance. So knowing it is really a global event and your institution is not the only one dealing with the challenges, you really have to account for that as well. And I think any opportunities that institutions have to collaborate and share their insights, observations will be very helpful to them.
Yeah, and speaking of institutions sharing their insight, once again, a big thanks to RMA and to really all of RMA's members, and your guys' relationship is such a great thing, because I was thinking about the various aspects you said to consider, and that work from home, and we get various agencies like NIST, how they came out with that work from home right in the middle of COVID, and that was great information. But to hear from the people that are on the ground doing the work, those are your members, and that you're getting this information out in the survey, just so valuable, Sylwia. So one last question here. So really, it's just, and it's really kind of open-ended. Provide any information you want here, but being an RMA for 20 years, being part of such an informative survey, is there anything that you'd like to share to any vendor management practitioners? Something that near and dear to your heart, or something that just could keep top of mind as they're continuing to face still that's a steady dose of lots of work in relation to vendor management?
I really think we need to collaborate better. When we do those meetings that very often meet, we realize that people internally don't talk to each other. So you could really chat with your BCP team to kind of figure out how whatever they're doing can be used by your team. And especially now with the increase of ransomware and cyber breaches, I'm probably not the only one researching the recent events and trying to find a correlation between cyber and third party. And I can't recall where I've seen that information, but we kind of estimate that cybercrime is predicted to inflict damages totaling of $6 trillion in 2021. And knowing that the information can be hacked through your systems or through your third-party systems, it really doesn't matter to your customers. But I think you have to really pay more attention of what's happening in every single areas of your bank, not just strictly with keeping the relationship with vendors, but kind of try to figure out the unknown and how they can impact your particular area. I know as many institutions and employees are adapting to working remotely right now, there is probably a bigger than ever need to continue adjusting to changing landscape and protect operations and make sure you're prepared for the unknown.
Wow, thank you so much, Sylwia. Again, I could talk to you all day, but we are out of time. Thank you again, and look forward to talking to you again sometime soon.
Thank you, Michael, and thank you to Ncontracts for inviting me today. And I really want to congratulate you on your acquisition with the QuestSoft. Thank you.
Hey everyone, that wraps up another great episode of the Ncast, where we are able to talk with people on the front lines of risk and compliance across the financial services industry. If you liked what you heard, please leave us a review. And if you're not subscribed yet, we invite you to do so on your favorite podcast platform. Thank you so much for listening, and we'll see you soon.